Yesterday, we wrapped up the day pretty much flat, but the key point remains that the kind of cues that we're getting from across the globe, that continues to remain fairly powerful. Take a look at the moves that we witnessed. New record-setting closes just yesterday afternoon for the S&P 500, for the Nasdaq, and it clearly seems that the market has the potential to broaden beyond tech as well. A lot of those stocks gained. You also had our own markets, which gained for a fourth straight day on the trot. The fact that the volatility index as well spiked above that 22 mark, and it has been a lot of the rate sensitives that have been proving their might. For instance, the defense sector, the PSU sector, or even the metals index, which surpassed that 10,000 mark. So across the board, it seems like the momentum is intact, and Nikunj, we've got support coming in from across the globe as well.
See, we can just ignore global cues and there's nothing wrong with the setup. So if you just check on the global setup right now, both in terms of the levels, in terms of the news flow, in terms of positioning of crude and 10-year yield, I guess you can safely ignore global cues because it's pretty much status quo there. So global cues are strong, they are stable. Equity markets are holding on, gold prices are at a record level, silver is holding on. It just appears that globally there are just no concerns, at least on the horizon. So globally, I think we are looking, so the global change, so to speak, or the global handover, I guess, is promising. And that's really been the high point for equity investors, that globally, irrespective of what the macroeconomic concerns are, what the geopolitical concerns are, what the concerns are centered around, which way the 10-year paper would move, I guess global markets are firm and they continue to support and they continue to be stable, which in a sense I think is the biggest hurrah for the market at a time, especially when you're pitted against election cycle, so to speak, locally.
Okay, yes, indeed. That's how our markets are currently poised, and taking stock of our own markets as well. And it's interesting with respect to the fact that at a time like this, when we're in the midst of the overall election cycle, the fact that you do have the global cues as well supporting us, the fact that the BSE-listed companies on an intraday basis have been only showing you quite a bit of momentum in terms of the kind of record market cap that we saw intraday. Yesterday was about $5 trillion, and the BSE listed companies in the last 6 months have managed to add about $1 trillion in terms of their overall market cap. So Nikunj, even the way we're placed as compared to the globe continues to remain fairly commendable.
I think you've got to spend a minute here and first understand that while you may talk about nervousness in the market, we may talk about anxiety and anxiousness in the market, but for me that is not the real story. For me, I think there are a couple of factors which we must look at. Number one, BSE yesterday hit a $5 trillion in terms of market cap. What is the relevance of that? Well, that means that ahead of the election cycle, the market capitalization of Indian companies, it now stacks at $5 trillion. So markets have already made an all-time high in terms of the market cap ahead of the election. B, the index per se, and even the small and the mid-cap indices are not very far away from its all-time high. Let's look at that data. Small cap index is 1% away from its all-time high, Nifty 1% away from its all-time high, Sensex about 1.5% away from its all-time high. So in the run-up to the election, benchmark indices, which let's say 2 weeks ago, there was some degree of nervousness which was visible, I think that has faded away. If one looks at Friday's price action, add up Tuesday's price action, it is now clearly visible that the local crowd and the HNI crowd and institutional investors, they are positioning their portfolio for a pre and a post-election rally, which is that look at defense, railways, PSUs, few corporate names. All of them have rallied, and they've rallied very smartly from the recent lows. So looking at the setup, the mood point, I guess the markets are telling you that the last hurrah in the market is not over yet. Typically markets, they tend to rally in the run up to the election, and I see this time it's no different. And I think is the most unique aspect of what the market price action is. While we may look at the FI selling, we may talk about optically the Nifty has not made an all-time high, but in terms of the market cap and also in terms of the Also in terms of the participation of the stock, the positioning of the market, like I said yesterday, I think the last hurrah in the market is still left. It could come in the run up to the election, still about 10 days are left, or it could happen immediately after the election. But I guess a swift move in the market, and especially some of the capex and the government dominated stocks, I think is still there. I don't think we've seen the best of the gains, at least because of the election cycle. That is my view. So don't be in a hurry to sell if you've bought stocks with the assumption that you may get. Don't sell the stocks if you really have a short-term view in the market. I think the best of the election, pre or post budget election rally, I think is still left.
Okay, so the fact that there is still that last hurrah that continues to remain the editor's take. So I guess there are a lot of burning questions, Nikunj, that even a lot of our viewers may have, that at a time like this, when the markets are holding out, we've got support coming in across the globe, we've got the overall election momentum. What is the positioning in terms of the portfolio? For instance, yes, we have seen some select sectors. I flagged off metals or PSUs, etc. Is there any particular tilt? What exactly should be the positioning for an investor at a time like this?
See, you don't want to be short. You want, if you're really focusing on the election, cycle per se, I think the last hurrah is still left. The market would extend the capex theme, the defense, the railway, and the infrastructure theme slightly more, because then there would be visibility. I guess if one looks at the market positioning, the way I see the market positioning is that DI and retail positioning at an all-time high, FI positioning in terms of the hedging or shorts is at a 10-year low. So what may actually happen is that once the election verdict is over, and for institutional investors, with due respect, whatever the compulsions are, the positioning is negative. So markets have to turn. They would turn, I think, on the FI front. So if you really want to play a strategic move here, it may be a good idea to buy FI dominated stocks with the assumption that FIs will be forced to come back just ahead of the election verdict or immediately after the election verdict. So there could be a largish move which could really come in FI dominated infra, defense, or even banks. So for me, that's one strategy. Second strategy is that if you bought stocks 8-10 days ago, I think you may want to ride them at least for better part of at least this month. Another 4-5% gain in some of the defense, few corporate names, railways, I think that is still there. So if you want to play for a tactical trade, buy FI dominated large cap stocks, because there would be a bout of short covering after elections. That's my sense. If you want to ride the momentum, then at least till better part of this month, or till this week is not over, I think there is merit in perhaps sticking to your longs in infra, PSU, railways and defense stocks.
Okay, that's the overall tilt of the market and what the advice is as to how you should be positioning yourself. Hope you took note of that.
If you like this video, then like, share and subscribe to ET Now.